Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on the Nigerian stock market half-year review and outlook. The Nigerian stock market has demonstrated an impressive performance this year, with the Nigerian Exchange All-Share Index (NGX ASI) reaching 119,978.57 points. As of June 30, 2025, the index has returned 16.6%, which is lower than the 33.8% return reported for the same period in 2024. Most of the gains was realized in the second quarter of the year, bolstered by impressive earnings releases, corporate actions, and relative FX stability. The NGX ASI tracks the performance of all stocks on the Nigerian exchange, with results varying across different sectors and individual stocks. The stock market capitalization, often referred to as market cap, rose by 13 trillion naira to 78 trillion naira at the end of June 2025. The market cap is a financial metric used to determine the total market value of a publicly traded company's outstanding shares. It is a key indicator that helps investors assess the company's size and overall market value. By sector, the consumer goods sector led with a 52% return in the first half of 2025 relative to 41.1% in the same period in 2024. This was followed by the banking sector at 18%, insurance at 5.3%, and industrial goods at 1.6%. The oil and gas sector was the only laggard, posting a negative performance of 10.1% due to the poor first quarter results. Stock investing is suited for investors with a minimum to high risk appetite due to the inherent price fluctuations. Investors can earn two types of returns from investing in stocks. 1. Dividend return. This is a portion of a company's profit or cash flow that is distributed to existing shareholders. This return is also called dividend yield, which is the total dividends, interim and final, received per share divided by the price per share. 2. Capital appreciation. This gain occurs when the current market price of a share exceeds its purchase price. Depending on your investment strategy, you may choose to sell the shares to realize these gains. The top 5 gainers this year include Better Glass 256%, Honeywell Flour 252%, Smart Products Nigeria 175%, The Initiates 170%, and Vitafoam 163%. On the other hand, the top 5 losers are Corn Oil 37%, Unicel 33%, MRS 28%, Deep Capital 25%, and Julius Berger 24%. A review of domestic and foreign transaction reports as of May 2025 shows that domestic investors accounted for 70.8% versus 79.6% in May 2025 of total transactions, while the balance of 25.8% versus 20.4% in May 2024 is by foreign investors. A further breakdown of the domestic investments shows that domestic retail investors accounted for 49.5%, which is 1.2 trillion naira of total transactions, while domestic institutional investors accounted for 50.5%, which is 1.2 trillion naira. Foreign investors recorded a net inflow of 13.3 billion naira this year. However, the data showed increased activity in foreign portfolio investments, rising to 29% as of May 2025, compared to an average of 20% in 2024. In the second half of the year, we anticipate sustained investor interest due to impressive half-year results, the expected reduction in interest rates, relative stability in the FX, and renewed interest from foreign investors. Some of the expected promising sectors in the second half of the year include A. Industrial goods. Strong demand for products and a positive first half 2025 earnings will restore investors' confidence. B. Consumer goods. Positive first half 2025 with minimal or no FX losses will boost PAT. C. Telecommunication. Strong first half of 2025 results reflects an earlier upward review of tariffs. D. Agriculture. Higher than expected first half 2025 earnings and declaration of larger interim dividend. E. Insurance. Recapitalization exercise to influence earnings. F. banking sector. A second round of recapitalization and a delay in rate cuts will further enhance earnings. The ability to exit the forbearance list as swiftly as possible will strengthen the sector confidence. Ultimately, long-term investors should focus on companies with strong operational performance and a consistent record of paying dividends for at least 4 out of the last 5 years. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS 07082463747. Stay blessed and have a great week.